Markets move when people move together, and understanding that early is the real advantage. When we move together, we shape outcomes, build wealth, and secure a safer future. The S&P 500 ended slightly down after a volatile session, while the Dow Jones managed modest gains. The Nasdaq lagged due to continued profit-taking in mega-cap tech stocks. Market breadth was narrow, reflecting investor caution ahead of key economic data later this week. Positioning should remain selective, focusing on sectors showing clear leadership. Defensive names might offer stability until more clarity emerges on Fed policy. Avoid broad tech exposure for now. Federal Reserve officials reiterated their commitment to fighting inflation, signalling potential rate hikes ahead. This hawkish stance counterbalanced recent softer inflation prints, keeping bond yields elevated and adding pressure on growth stocks. Expect continued volatility around interest rate expectations. Short-duration bonds and financials could benefit if rates remain high, while long-duration growth names may face headwinds. Energy stocks outperformed amid a rebound in crude oil prices driven by supply concerns and geopolitical tensions. This sector's strength is a clear signal of risk-on sentiment within commodities and cyclical areas. Energy exposure remains attractive in the near term, supported by supply constraints and resilient demand. Consider tactical allocation to oil majors and integrated energy plays. Technology sectors struggled with profit-taking after a string of strong earnings from select names. Concerns around valuation and margin pressure weighed on semiconductor and software stocks in particular. Cautious stance recommended on tech for now. Look for consolidation and stronger earnings confirmation before re-engaging aggressively. Nvidia reported impressive earnings, beating estimates on revenue and guidance. The company's AI-driven growth narrative remains intact, driving strong investor interest despite broader tech weakness. Nvidia's momentum suggests it could lead a tech rebound if it sustains this earnings strength. Active traders might watch for a break above recent resistance levels. Consumer discretionary stocks lagged amid worries over slowing consumer spending and mixed retail sales data. Inflation pressures continue to weigh on discretionary budgets, impacting retailers and discretionary services. Risk-off sentiment in consumer discretionary suggests trimming exposure or seeking defensive income alternatives until spending trends stabilise. Risk appetite remains uneven as investors digest conflicting signals from inflation and central banks. While commodities and cyclicals show risk-on traits, tech and discretionary sectors reflect caution, indicating a cautious overall stance. Balanced portfolios with a tilt towards cyclicals and quality defensives likely perform best amid ongoing macro uncertainty. Geopolitical tensions in Eastern Europe and the Middle East are continued to support commodity prices and safe haven flows. Investors remain vigilant, with any escalation likely to drive further market volatility. Maintain some exposure to safe havens and commodities as geopolitical risks remain a key market driver. Highest conviction setup. NVDA. NVIDIA's dominant position in AI and data center markets underpins strong revenue growth and margin expansion. The recent earnings beat and bullish guidance indicate robust demand that could sustain momentum despite broader tech headwinds. Expect NVIDIA to continue outperforming peers, with potential for a breakout above resistance levels as investors refocus on growth and AI themes. Volume and price action should confirm strength. If this breaks, a failure to hold current support levels or a downgrade in guidance could signal weakening demand and reduce upside potential. What happens next? Markets remain choppy with rotation between cyclicals and defensives. Inflation data and Fed comments will drive near-term volatility, but selective opportunities in energy and AI-related tech persist. A sharper-than-expected hawkish pivot by the Fed or escalation in geopolitical conflicts could trigger a broader risk-off sell-off, pressuring equities and commodities alike. Tomorrow watch upcoming CPI and PPI inflation reports, Fed speeches and meeting minutes, crude oil inventory and production data, Nvidia and other tech earnings updates, geopolitical developments in Eastern Europe, retail sales and consumer confidence data. Markets move when people move together, and understanding that early is the real advantage. When we move together, we shape outcomes, build wealth, and secure a safer future. Real wealth starts with discipline, health, and strong relationships. Take care of yourself. Take care of the people you love. Stay focused, keep learning, and stay informed. Until next time.